So I'm going to be talking about today, not just about money, but more particularly how money has been changing, how you can find opportunities in today's new economy. Now, I had an amazing introduction, but I will talk about myself for just 1 second. My name is Jaspreet Singh. I am the host of the Minority Mindset Show, and I run a company called Briefs Media. We have free newsletters for entrepreneurs and investors. But the reason why this is so important, and everything that I talk about today is so important, is because money is changing. And not only is it changing, but it's never going to be the way that it was before. Now, what does that mean? Well, the best way to understand this is just to go back in time a little bit. If we think about how money was back a few decades ago, and the reason why I started off asking who's from America isn't just because I'm from America, but also because some of the numbers that I'm going to talk about are more specifically the United States. However, you're going to see that they apply everywhere around the world. So just know that. If you go back in time to the 1970s, back then we had one-income households. Generally, the man went to work and the woman did not. She was working, just didn't bring an income. But during that time, that one income was able to support a family of four fairly comfortably. That one income was able to buy a home. That one income was enough to buy a car, maybe even two cars. That one income was enough to pay for your kids' college, and even beyond that, that one income was enough to save money and put money aside for retirement. Now, if you fast forward a little bit to now, where are we? Now we have two-income households. And with these two-income households, people are struggling to buy a home. In fact, millennials talk about how tough of a time it is financially to be able to buy a home with the incomes that they have. In addition to that, people are struggling to buy cars. In addition to that, people are really struggling to pay for college. Not to mention, people are struggling to put money aside for retirement. People are struggling to put money aside to build wealth. And now the question is, what happens going forward? What is life going to be like in 2050? Because if that's what it was 20, 30, 40, 50 years ago, what is life going to be like in 2030, 2040, 2050? Are we going to go back to 1970 where it was one income was enough? Or are we going to need four income households? And this is where we have to get a little bit smarter financially and start asking the questions, what got us to here? Why is this happening? And to really put this in perspective, let's take a look at some deeper numbers. I know numbers can be a little boring, but stick with me, it's going to get more exciting as well. If we go back to the 1970s to now, what we saw was household income grew by 640%. But remember, the household income now is based off of primarily two incomes. Before, the household income was based off of primarily just one income. But now if we compare that to the cost of living of things that we all need, home prices over that same period grew by 1,100%. The price of new cars grew by 1,500%. College tuition prices, public university prices, have grown by 1,900%. So what does that mean? The cost of living is growing way faster than our incomes. Why is that happening? Well, this is because of something I like to call the hidden tax. Yes, somebody's heard that. What is this hidden tax? Well, I'm going to try not to make this a history lesson, but what happened in the early 1970s, in 1971, was back then, or before 1971, the United States was based off of the gold standard, which meant our money was actually money. Have you ever wondered what is money? Yeah, but what is it? Right? Today, what is money? Today's money is not what money was back in 1970. Because before 1971, our money, what we call money or paper dollars in the United States, were backed by physical gold. Meaning, if our government wanted to spend money, they wanted to go and build something, they needed more wealth, or they had to tax you to raise the money to do that. And that wealth was gold. But in 1971, our President Richard Nixon, took the dollar off of the gold standard, which meant our money became paper, which means the government would have the ability to print and spend whatever money they want without any real implications, right? Well, we'll talk about those implications in just a second. But that gave now the government the ability to print more money. Now remember this, if you want to build a bridge, if you want to hire teachers, if you want to hire police officers, it takes money to do so. Generally, if the government needed more money, they would have to raise their taxes. Now there's a hidden tax, which I'm going to explain in just a second. But the reason why this is so important right now is because of what I like to call the $13 trillion problem. See, a few years ago came the pandemic, which we all painfully remember. But from the financial cost of the pandemic between the years 2020 and 2021, in the United States alone, there was $5.4 trillion spent on COVID relief. Another $4.5 trillion on quantitative easing. This is money in order to inflate the markets. In addition to that, another $3 trillion on infrastructure was spent. Now, what does that mean? Because our government in the United States, and this is pretty much the same across the world, is in debt. And if you spend money that you don't have when you're already in debt, there has to be a cost to that, right? I mean, it's nice when we get free money, but the most expensive kind of money is free money. Now, this sentence is gonna evoke a lot of emotions. Like when my wife hears this, who I should also mention is very beautiful. When my wife hears this, she gets a sigh of relief. Well, I thought that was me, the expensive part. No, the most expensive kind of money is free money. What does that mean? When you spend money that you don't have, there's a consequence to that. Like if you go to Chanel tomorrow, you buy a $5,000 purse with money you don't have, there's a consequence. You got to pay that money back plus interest, credit card debt. But when the government spends money that they don't have, what's the consequence then? Because there is a consequence. And the consequence is inflation, the hidden tax. Because now when the government spends money they don't have, who pays for it? Everybody else. All of us end up paying that price. But how? Through inflation. And the thing about inflation that is so important to understand is that it disproportionately hurts the poor. It disproportionately hurts the middle class. It disproportionately hurts the financially uneducated, while it disproportionately benefits the financially educated, and it disproportionately benefits the wealthy. Now, this doesn't mean you have to be wealthy to benefit from it, but you have to understand it to benefit from it. Now, let me ask you a quick question. How many of you have heard of inflation? You're aware of high inflation in the world right now? If you have, raise your hands. Wow, okay. Let me ask you another question. Prior to the pandemic, how many of you were closely monitoring inflation levels? We got a few people, wow, a few money nerds out there. Most people didn't. And I know this because, well, I'm on YouTube. And in order to get seen on YouTube, you have to do some weird things. One of those weird things that I did was, how about I walk around the streets of America and ask them if people understand inflation? One of the ideas that I had. So I walked around America, different parts of the country, California, New York, Washington, D.C., and I asked people, what is inflation? And some people would say, it's when my tire gets flat because it got overly inflated. Some people said that inflation is, well, when things happen in your body. You would get the craziest answers about inflation. And these videos helped me grow on YouTube. But the most common questions that I got regarding these videos were, how many people did I have to go out and ask to find these types of crazy answers? The answer was, I didn't go out trying to find people. I just stood on the street and asked people about inflation, and I shared those answers. This was the average sentiment around inflation. Most people had no idea of what inflation was, and my first video to go viral, interestingly, the first video that ever got 100,000 plus views was a video back from 2016 explaining how inflation works, how inflation is making the average person poorer each and every day. Now, this was back in 2016, and that video went viral because I explained if inflation, which back then was 2 to 3%, If your inflation is 2 to 3% and your bank is paying you 0.01% on your savings, that means you're losing 2 to 3% of your savings value to inflation every single year. And people saw that and said, oh my God, 2% inflation? What are we going to do? Then came the pandemic, and 2% inflation seemed like a beautiful thing that we could have. And this is where it's important to understand, okay, well, what is inflation? How does it disproportionately help some? How does it benefit others? And how can I put myself on the side of being benefited by inflation? And this is where we have to understand, one, what is inflation? Inflation comes from the word inflate, which some people kind of said when I would ask people these questions. Like, when we inflate our tire, we're making the tire bigger. But inflation, more specifically, has to do with money. We're increasing how much money is out there. Now, most of us don't have the ability to print money. At least I hope. Don't tell me if you do, because I am an attorney and I'm not allowed to know that. We don't have the ability to print this money, but the government can spend money. And they can finance this spending through central banks, things like the Federal Reserve Bank in the United States. So if money gets printed, the government spends it, it enters the economic system. Now, this can help us feel good, especially in the short term, because now, if we get free money, we feel rich. We can go to the Gucci store, go to the Chanel store. We can go to I like to call it Hermes, but I'm pretty sure that's not right. We can go to the expensive store that starts with the letter H, and we can go buy things, and it makes us feel rich. And that's what happened during the pandemic. And I keep talking about that because that's the clear indication of, it just explains and demonstrates how it works. When people get money, we spend it. That's what money is for. I mean, there's no point to have $1 million sitting in the bank. That doesn't do any good. We want to spend it. But let's play that scenario out. We get money, we go to the store and we spend it. We feel like we're rich, but somebody else is actually getting rich. So now when inflation happens, everybody gets money. If we all go to Walmart and we start spending money, where does this money go? It goes to Walmart. And when we go to Walmart and we start buying things at Walmart, now Walmart starts running out of things. They start running out of clothes. They start running out of TVs. They start running out of products because everybody has money to spend. And now when Walmart starts running out of products, they have to go to their suppliers and say, hey, we need more TVs. We need more stuff because people keep buying our products. Then the suppliers have to start manufacturing more things. And because now they have more demand, they need to hire more workers. They have to create more products. They have to get more raw materials. And then when you have to go and produce more raw materials, you start to see the price of those raw materials rise. And you start to need more workers. And you start to see the workers need more money too. And so now the cost to produce that product goes up. So now Walmart has to pay more money to get the product. And now because they're paying more money, they also have to charge more money. So now when you go to Walmart to buy that same TV, you thought you were going to get it for $500. Now it's $600. And you're like, oh, that's not fun. You pay that $600, and if people keep spending, then it goes up to $700. And now we get upset because the prices of things are rising. But the reason why so many people get upset about it is because we don't understand why it's happening. And now, this is where we have to understand, how are some people benefiting from this? Because if you have to pay more money to buy that TV, you're not going to be very happy. See, as a consumer, we're not happy when inflation happens. But Walmart is benefiting because they get to sell their stuff for more money. But who benefits from that? Walmart's benefiting. Who owns Walmart? Anybody can own Walmart. Anybody here can own Walmart with as little as $100. And this is what the financially educated understand, is that we can benefit from this if we own a piece of the people, of the companies selling things. And that's what wealthy people have been doing. And that's why they've been able to become wealthier because of inflation. But inflation is also a double-edged sword. Because if you have too much inflation, then eventually that's going to cause a downturn in the economy. This is why inflation disproportionately, remember this, it disproportionately benefits the financially educated, it disproportionately hurts the financially uneducated. And so now if we think about where is life going to be like, not in 2024, but 2030, 2040, 2050, is inflation going to go away? Well, I don't think so. The Federal Reserve Bank says that they want inflation to come down to 2%. That doesn't mean they want the price of things to go down. That means they want the price of things to go up just less quickly than it is right now. So they're telling us inflation is going to be around, and it's going to be a while before we get inflation down to 2%. This applies across the world. This is not just the United States. So if inflation is high still, it's going to take time for it to cool down to normal inflation. That means it's going to continue to be hot inflation until it comes down to normal inflation, which means inflation is not going away, which means, oh, we might need more income in order to survive, which is why it really is so important to understand this, because it's also going to create more opportunities than really ever in our lifetimes. And the interesting thing is, well, we're not taught about this. I mean, how many of us were taught about inflation, building wealth in school? No. A few of us, those are good schools, wherever you learn this. But most of us are never taught about this, myself included. My parents are immigrants from a state in India called Punjab. And growing up, like many Indian immigrants in America, my parents wanted me to be a doctor. In fact, my parents were actually kind of generous on this. They gave me two options. They said, Jaspreet, you can either be a doctor or you can be a failure. You get to pick. So, being the nice, studious kid that I was, I said, okay, I will follow what my parents said and become a doctor, because that seemed like the right thing to do. Now, they had very good intentions. They wanted me to become successful because, well, when you come from one country to the other, where you don't speak the language, where you come to a country with very little money, where you make all these sacrifices to come to a new country, you want your kids to become successful naturally. And I wanted the same thing. I wanted to give back to my parents. So I wanted to become successful. But the interesting thing about that, which always kind of never really made sense to me, was they wanted me to be a doctor to become financially successful. I wanted to become successful. But I wasn't allowed to talk about money. I wasn't allowed to ask about money. I wasn't allowed to talk about building wealth. I wasn't allowed to say anything about being rich, because that was bad. Anybody ever heard kind of like money's bad, don't worry about money, don't stress about money? Hands up if you've heard that before. Yeah, a lot of us. So we hear money's bad, money's evil, money's greedy people worry about money. Yet at the same time, I'm seeing my parents work night and day. My dad would never, rarely would he get a Saturday and a Sunday off. And so it didn't make sense to me. We're working so hard to make money. You're working so hard to make money. You want me to become financially successful by becoming a doctor, yet we can't talk about money. And that was where I started questioning things. Maybe I should learn things a little bit differently. So along the path of trying to become a doctor, I started doing my own entrepreneurial ventures. And that's what got me started into learning about money and investing. And this is where most normal people get excited. Like, oh, I can take my money and I can invest it. What a great opportunity. I got angry. I said, what the heck? I never learned. I studied hard in school. I got the good grades. I took the AP classes, which is what we have in the United States to help you get college credits. I took the good classes. I got the good teachers. I got into the good universities. But I never once learned a thing about money and financial education, and that made me kind of upset. And that's when I realized, well, we don't really learn a lot of things in school that we should learn about in life. We never learn about building wealth. Never learn about financial freedom. We never learn about how to capitalize on financial opportunities, even though that's what wealthy people do all the time. We never learn about how our economic system works. And we don't learn a lot of the other things we learned here at Mind Valley University, which is why it's so great that many of you, or all of you, are here. But for today, we're going to be talking about how to capitalize on the economic opportunities. We can't go over all of it today, but how do you now capitalize on the economic opportunities that might be coming our way or that are here? Well, the first thing is you can't be doing what the majority of people do. So I run a show called The Minority Mindset, and what this means is not anything to do with the way you look or your ethnicity or your skin color, but it means thinking differently than the majority of people. Because if you see everybody running away, that creates opportunity for you to now go against what everybody else is doing and seize that opportunity. Which brings us to the question, where is the opportunity today? And the best way to understand this is to go back in time a little bit. Because history, while it doesn't repeat itself, history does rhyme. So let's take a look now. We're going to go back to, people like to talk about once-in-a-lifetime opportunities. Let's talk about most of the once-in-a-lifetime opportunities that all of us have seen in our lifetimes. Going back to the 2000 dot-com crash. Before the year 2000, there was a big bubble that was created because dot-com companies were the future, the internet was the future, and any company that had the word dot-com at the end of it became a multi-million-dollar company because, well, the internet is the future. And we saw this huge run-up in dot-com companies, which ultimately blew up in 2000, 2001. And from the peak to the bottom, you don't have to worry about what the NASDAQ is for now, but you saw these dot-com companies crash by nearly 80%. And that was when everybody said, the internet is over. No one's going to use the internet in 2010 or 2020, that the internet is a thing of the past, it was just a fad. Well, we all know today, the internet was not a fad, but it created huge opportunities when the bubble burst. Then we had another once-in-a-lifetime opportunities in 2008. Real estate up to the year 2008 was the world of opportunity. Anybody could have gone out and bought real estate with no money down. What if you had no credit? No big deal. What if you had no income? No big deal. What if you have no assets? What's that? Just sign the paper and you can get into a home. And if you didn't have the money to sign the paper and get into a home, they'd even give you a free TV leading up to 2008. It was a great time. People were making money, but then ultimately that bubble burst as well. And when that bubble burst, we heard the same things. This was when I started getting involved in real estate and investing. I happened to be in college at this time. I bought my first rental property in 2011. And what was funny was back then, in the 2010, 2009, 2011, what people were saying was, don't buy real estate. No one's going to ever use real estate in the future, which really was a weird thing that even people with money, people who were educated, were talking about how there was going to be no need to own real estate because that was the sentiment. It was such a negative idea to own real estate because everybody was losing their shirts in real estate. So why in the world would you want to go against the grain to own real estate? But real estate prices fell by 40 to 90%. People got scared. Everybody ran away. And it created opportunities for some people. And I can tell you this from experience. This was the first rental property that I bought. This was back in 2011. I was 19 years old. I knew zero real estate investors. I knew nothing about real estate investing. I didn't even know anything about investing. I don't even know that you could invest in real estate. I was studying to take the medical college admission test, which is the test you take to get into medical school. And I was so bored and annoyed by trying to understand all these biological terms, which are so confusing. And I'm going on to Yahoo Finance, and every article is talking about how real estate prices are at rock bottom. I was like, let me just start looking at this because I was reading business books, and they said that wealthy people own real estate. I knew I wanted to become wealthy. I don't know how to get there, but if wealthy people own real estate, maybe I should own some real estate too. That was the connection that I had in my mind. So I started looking for properties. This condo, a few years prior to me buying it, this is 2011, sold for $150,000. Then it was foreclosed on. The market crashed. It was listed on sale for $8,400. I came in and said, that's too much money. So I offered $4,000. Naturally. The bank said, how about we give it to you for $7,000? And I was going to go back and forth. I'm thinking about how much money do I want to offer because that's a lot of money when you're 19 years old. And I said, well, let me think about this. The bank comes back to me and says, actually, you know what, Jaspreet? We got another offer on the table, so we need your highest and best offer. So now I didn't want to lose out on the opportunity to purchase this, so I made an offer for $8,000, which they accepted. I bought this property for $8,000, put in a few $1,000s worth of work, and then I rented it out for $600 a month. That's the beautiful part of the story. The part that most people don't tell when it comes to these first-time deals is you have no idea what you're getting yourself into. I don't know what it was like to have a tenant who ended up being a nightmare tenant. I didn't know what it was like to find a property management company, which I didn't realize I hired a scam property management company. I didn't know what it was like to work with contractors who say they're licensed, but actually are not licensed. But you learn pretty quickly. but the important part here isn't the lessons, which you are going to learn by doing. You can learn by taking classes. You can learn by reading books. But the important part is understanding that there are opportunities there. And when the opportunities are there, most people never see them, or most people are very against them because of what's happening in the world. What about the next once-in-a-lifetime opportunity? Then came 2020. We all remember this one. 2020 came, and in a matter of days, the stock market fell by more than 30%. And this one, I understand the public sentiment because, well, I was older, but secondly, because I was on YouTube. And people are very open to telling their opinions on what's going on in the comments section. So this started happening. And I went from making about 3 videos a week to 7 videos a week because the entire economy flipped upside down. And when the stock market was crashing, one of the things that I was saying was, I'm starting to buy stocks more aggressively. As stocks fall further, I buy more aggressively. And I would receive a flood of comments, and I mean a flood of comments of people saying, Jaspreet, have you lost your mind? The market is crashing. Why are you buying? Why would you want to buy when stocks are at a discounted price? And it was interesting because when you were at this point in the economy, you have no idea what's happening tomorrow. I mean, we can remember what happened in 2020. Nobody knew if we were going to go into work. The NBA was getting canceled. The whole world was getting flipped upside down. We didn't know if we were going to be able to breathe air out of our basements again. Like it was a weird time. But the thing about the media is when times are good, they tend to overestimate how long and how great they will be. And when times are bad, they tend to over-exaggerate that fact too. And so what we have to remember is things are generally never as good as they may seem, and things are also generally never as bad as they may seem. And that is what will help you now as an investor, because when you have the public sentiment, it can be very hard to go against it. So this happened in March and April of 2020, and then a few months later, the stock market was breaking brand new record highs, which I'm going to be honest with you, I had no idea. This blew my mind at the speed at which we saw money enter the markets. Now, why did this happen? This goes back to the $13 trillion problem that I was talking about just a little bit ago. The amount of money that was created in 2020 and that was injected into our financial systems, into our economy, into people, into businesses was unheard of. I work in finance. My media company covers what's happening in the financial news every single day. We research money. This is what I do every single day. I had no idea that we were going to see this type of injection of capital, money, into our economic system. Which means, well, what is that going to do? And what opportunities will this create? Because that will create opportunities as well. Which brings us to the question, what do you do? Now, this is where it helps to have that basic level of now financial education. And that means, how do people become wealthy? And a lot of people assume that the way you become wealthy is by getting a good grade, becoming a doctor, or another high-paying profession, and then being able to live the rest of your life financially free, rich, and happy, and healthy. Because if you're a doctor, you don't have to worry about what you eat. You're going to be healthy, right? Well, what we realize is sometimes what we've been told wasn't exactly 100% accurate. And so when it comes to the financial side of things, we have a bunch of amazing teachers at Mind Valley University that are going to talk about many different types of health that are way smarter than I am. But when it comes to the financial side of things, the thing that's important to understand here is the way you become wealthy isn't just determined by how much money you make. In fact, and I know what you're going to say if you're not from the United States, that's just what Americans do. In America, in American culture, when you make money, you spend money. When you make more money, you spend more money. And what we've seen in America is as people make more money, they end up in worse financial situations. How? Because when you make more money, banks look at you and they say, oh, you make a good income, huh? How about we give you a little bit more debt? How about another credit card? How about another line of credit? We feel better and more accomplished when we make more money, but in reality, what does it end up doing? It makes us more likely to spend more money. And so this is where the first thing we have to understand is, what do we do with our money so we don't end up in that financial situation? And the thing that you have to do is, number one, stop relying on just your income in order to survive. Now, I know a lot of you here are entrepreneurs, which is a very beautiful thing. But you cannot just rely on your one income in order to survive, which means you have to take that money and own assets. And the reason why is because there's a limit to how much money you can earn, but there's no limit to how much money your money can earn. There's a limit to how much you can do, but there's no limit to how much your money can do. And that was the interesting thing that we never really learned in school, because we go to school to learn to get a job, at least most of us, except a few people who got the good schools. But most of us go to school learning how to get a job, versus wealthy people are learning how to own the job. And that's that change in mindset, is you have to understand now, how can you put your money to work? That way you can capitalize on the opportunities, and the way that you do that is you have to own the assets. Because when you own the assets, when things like inflation happen, it doesn't affect you as much. Inflation hurts consumers, because now when I go to Walmart, I got to buy something, I got to spend more money. If I want to come all the way across the world to Estonia, I got to pay more money for those flights. But when you own the airline, when you own the hotel, when you own the assets, you get to benefit from that. And then the next question is, well, I'm not a millionaire. How do I start doing that? You don't need a lot of money to start. Nowadays with technology, I say $100. You really only need $1 to get started thanks to technology. Is a $1 investment going to make you rich tomorrow? Absolutely not. But it's a place to get started. So you have to start investing. Where can you invest? You can invest in stocks, you can invest in real estate, you can own businesses, you can work on your own business. But the key is you have to start putting your money to work. That way it's not just you and your salary that's producing an income. You have to own assets that don't just rely on you. And then the next question that many people have is, well, do I have to go out and become a professional investor? No, you do not have to be a professional investor. Some of you are going to be very busy working your jobs, excelling in your careers, or running your businesses. In which case, you don't need to worry about what's happening in all the markets and spend all of your time investing or researching your investments. But you need a system where now some of your money is being invested. A simple thing that you can do is follow something like what I call my 75-15-10 plan, which says for every dollar that you earn from here on out, 75 cents is the maximum you can spend, 15 cents is the minimum you're investing, and 10 cents is the minimum that you're saving. Why? Because now whether you're making $20,000 a year, $200,000 a year, or $2 million a year, you're always putting some money to work. That way you can own the assets. But when it comes to now being able to capitalize on opportunities, there's one key thing that you have to understand this. And the thing that you have to understand is poop. P-O-O-P. You have to understand this concept if you want to be able to capitalize on opportunities. Now, what is poop? Well, poop is understanding that panic leads to overselling. Overselling leads to opportunities, and opportunities lead to profit. And this is an important concept to understand, because we see the poop method happen pretty much anytime you see something bad happen in the markets. The first thing is we see a run-up. And this will happen in anything that you can imagine, any industry that you can imagine. People get excited naturally. And when people get excited, they want to buy things. When people feel like they can get rich quickly, they want to buy that thing. When people see other people getting rich quickly, they want to buy that thing. And when people feel like they're getting rich, they're going to go into debt more to buy that thing. That builds a run-up. Well, what happens then on the flip side is eventually people realize, maybe I overpaid for this thing. We saw this with .com companies in 2000. We saw this with real estate in 2008. We saw this with stocks, real estate, cryptocurrency in 2020. But people feel like they overpaid. And then you start to see this little bit of a downturn. And when the little bit of a downturn happens, that's when the traditional media comes in and they talk about how, uh-oh, we're starting to see things turn for the worst. You want to get out while you still can. That starts to create this feeling of panic. We saw that in 2020. We saw that in 2008. We saw that in 2000 and 2001. Well, when people start to panic, they start to sell. And when people start to see their portfolio down, even the people that didn't have to sell, even the people that were in financially good situations, might now feel scared because the sentiment now with the internet can easily be spread. People, when they're happy, they can talk about how happy they are. When they're upset, which is a lot of the internet, when people are upset, they can openly talk about how upset they are. And then people love talking about that, which then creates more feeling of that panic, which then causes that overselling. When you start to see more of the overselling, that then creates opportunities. Because now everyone's selling out of their investments. They go, oh my God, I can't believe I bought this. This is horrible. Well, when you see that overselling, eventually now, some people are going to come out and say, I can't believe how cheap this thing is selling for. And this is when the whole world will think that you're crazy for wanting to buy this. When I wanted to buy real estate, the whole world thought that I had lost my mind because I didn't have a lot of money. The people that had money who I said, hey, maybe you want to buy some of this real estate, thought that I was the crazy one for wanting to buy real estate. But people will think you're crazy now because now you're the one that's looking at this opportunity saying, there's a lot of opportunity here. How about I go out and start buying this investment? That then creates the opportunity to profit because then as things turn around, as things get better, now you have the ability to see the upside because that's when you can start to see the markets go up. You can start to see the economy grow again. You can start to see people spending again. And that's where you get the ability to benefit because now you get to own that investment which you bought at a discounted price. Right? When Macy's has a sale, people have a line around the door trying to buy those sweaters. When investments go on sale, most people run away. And this is where you want to be able to see that profit, see that opportunity, and create the profit, which is, well, now, how do you find those opportunities? And that's where you have to understand the opportunities are kind of like buses. You have to start looking for the opportunities to actually see them. I lived in New York with my wife for a little while recently. And what was interesting was the first time I went to New York, we refused to take the subway system. We were like, we'll just take Ubers, it's easier. So we had no idea where the subways were or how they worked. The next time we went, I said, let's figure out how this subway thing works because Ubers are kind of slow in New York. It's a very busy city and it can take a long time to go 4 blocks in an Uber. So we decided to take the subways. And that's when I realized, wow, now I see where all the subways are. Now I can start to see where all the subway lines run. Now I can see where all the stations are, which I had completely ignored until I started looking for the subways. Opportunities are the same way. They're everywhere around us. But until we start looking for those opportunities, we're never going to be able to seize them. Now it's easier to see those opportunities when you become more financially educated and when you're financially prepared. Those are the 2 keys here. You have to be financially prepared and you have to be aware and educated to be able to capitalize on those opportunities because otherwise it's just panic. It's just what you see around you. And those are the 2 things that you need to be focusing on right now as we start to look for these opportunities around us. Now, what does that mean particularly? Well, the first thing is you got to be prepared. Now, getting prepared means you have to be financially prepared. That means you got to get your money right. You could see the best investment opportunity in the world tomorrow. You could see an amazing business opportunity, an amazing real estate opportunity, an amazing stock market opportunity, but if you have $0 in the bank, you can't do anything about it. So you got to get your money right first. That means, number 1, if you have high interest debts, work to pay those off. Credit card debt, other high interest debts, those things you want to get rid of. That way you have more freedom to use your money. Number 2, you need to work on building your savings fund. If you don't have any cash put aside to protect you against an emergency and your kid's arm breaks, your car breaks, your window breaks, then you have to go into debt to fix that problem, which then becomes a negative cycle. So you got to have that savings fund. And you also want to have some savings put aside to be able to capitalize on opportunities. So you have to work to do that. Number 3, build that spending plan, something like the 75, 15, 10 plan that I was talking about just a second ago. That way, now, as you make money, you're not spending all of it. And then you got to put the money aside to invest. This one is key. You have to have money to be able to capitalize on opportunities, or you have to have access to money. Because no matter what the opportunity is, you're going to need some sort of ability to capitalize on it. Now, there are ways for you to bypass that money part if you're willing to put in more work. But having more money is going to allow you to capitalize on more opportunities, which is why right now, when times are okay, you have to be preparing for when times are not okay. Now, this doesn't mean, oh my God, the world is going to crash tomorrow. That's not what I'm saying. What I'm saying is, we know booms and busts happen. We just talked about what happened in 2000. We talked about what happened in 2008. We talked about what happened in 2000. This happens. Recessions have happened pretty much every decade for the last century in economies around the world, period. And so now when we live here or anywhere and we say, oh, I don't need to prepare because everything is good. Well, if we look at history, what we see is that history doesn't exactly repeat itself, but it rhymes again and again and again. So this is a time to be preparing. Prepare when times are okay for when things are not okay. When is that not okay going to be? I don't know. I don't have a crystal ball. But we're seeing all the opportunities, all the things that are happening. We've seen the inflation problem. We're seeing higher interest rates around the world. We're seeing slowing economies in the world. We're seeing a lot of things happen. And that's going to create those opportunities, because before the 2008 crash, we saw the big run-up in real estate. Before the 2000 dot-com crash, we saw the big run-up in dot-com companies. Now we've been seeing it in pretty much every asset class around the world. Real estate, stocks, startup valuations, I mean, you name it. We have been seeing booming assets, which is why, well, if things are okay, you need to make sure you're preparing for when times are not okay. The second part is you got to get financially educated. You have to learn about money. You have to learn about investing. And I know this is one of those things where it might feel like, well, why am I learning about money and investing? Isn't that just for rich people, greedy people, those types of things? No. We all use money every single day in our lives. And to have a healthy relationship with money, you have to understand how money plays a part in your life. You don't have to become all-encompassed and feel like money is the only part of your life, but you have to understand how money plays a part in your life, and then you have to learn about money. And this is going to be on your own now spectrum. Some people are going to become that, like, I love learning and reading about financial spreadsheets. Where are my weirdos who like reading spreadsheets? There we go. Yeah, there's a few of us out there. I love reading spreadsheets. I love looking at financial statements. I love reading cash flow statements. Most people are not over there. Most people are somewhere over here where it's, yeah, you know what? I just want to put my money to work. I like investing. I like owning assets. I like investing in things, and I like doing that. I just don't want to get into all that nitty-gritty. There are opportunities everywhere along the scale for people that want to be involved, that want to kind of be involved, to people that don't want to be involved at all. But the key is you have to start learning. And the reason why it's important for you to learn is because if you don't know the basics of financial education and you just trust somebody else, you have no idea if they're doing a good job for you. You can think of it just like with health. If you don't know anything about healthcare and you go to a doctor and you just blindly trust what they tell you, well, pretty soon you're going to be on a lot of different pills to take care of your health. And this is why unless you know the basics of what's important, you can't just rely on a financial advisor to take care of you. So what does that mean for you to do right now? That means, number one, watch YouTube videos, watch podcasts, because those are free and easily accessible. We got a song coming with us right now too. Okay. The second thing you can do is watch Mind Valley Quests. I'm going to be working to create a Mind Valley Quest as well, so make sure you look out for that coming soon. Third thing is, yes, coming soon. Third is read books. And this is where now you can start learning more about the different things that you were interested in. If it's real estate, read real estate books. Stocks, read stock books. If you want to invest in startups, read startup books. If you want to buy businesses, buy those books. Start learning more about what it is that you like. And then, most importantly, take action. This one I cannot emphasize enough, because you cannot bypass the education that you're going to get from experience. You can read every book out there, but until you do it, you're not going to learn. And this one can be painful, but that's how you learn. I talked about my first real estate deal. I was 19 years old, didn't know any real estate investors, didn't understand how real estate investing worked, didn't even know what real estate investing was. And I decided now I'm going to do this. I bought this property. I hired a contractor because I went onto Google and looked for cheap contractors. Found a cheap contractor. Got him in there. I said, hey, look, I want to renovate this, this, and this. He said, don't worry, we can do it for a really good price. Solid, because I don't have a lot of money. We got the work done. Then books said that you need a property management company to help manage the deal, because that's going to make your life a lot easier. What a property manager does is they make sure that your real estate deal is functioning and that the tenants are paying you rent every single month and that your bills are paid. What they don't tell you is that make sure that your property management company is an actual property management company. That part I didn't know. So I found somebody who said he was a property manager who was not a property manager. And I told him to lease his property out and make sure I get paid. Well, he wasn't able to lease it out. I put an ad on Craigslist, which is a little marketplace we have, and I found a tenant. The tenant moved in. They had my phone number. They also had the property manager's phone number. And anytime something went wrong, they gave a call to my property manager who said, I don't know what to do, call the owner, which was me. So I'd be sitting in my class, my chemistry classes, my organic chemistry classes, and I'd be getting these 2-minute long voicemails, which, by the way, a little rule of thumb, if your voicemail is over 25 seconds, just text the person. I would get these 2-minute long voicemails talking about how this property was imploding. Things were going wrong. I got this one call where the tenant was crying on the phone, telling me that we needed a brand new kitchen countertop. Now, mind you, I had just put in a brand new we redid the kitchen. We have a brand new countertop. She's like, I need a brand new kitchen countertop because now it's all destroyed. Apparently, she was cutting cucumbers without a cutting board, missed the cucumber, and cut the kitchen countertop with a little scratch, and now she needed a new countertop. I didn't know what to do, so I put in a new countertop. Got another call because the property was on the verge of having this huge electrical fire hazard, and she was worried that the place was going to light up in flames. Didn't call the property manager. She called me. I go to the property with my electrician. Turns out a light bulb fused. And, we learned that, okay, how do we manage tenants? How do you learn to manage things? And then we had an issue where the tenant said that the bathtub was very slippery. Or no, it was actually, let me back up. She said that the bathtub had a little chip in it. We said, okay. So my contractor goes out there, sees a chip about the size of a quarter, that big, and says, let's reglaze it. And how about we put in a handicap pole for the tenants? I said, okay, that's fine. The contractor goes to the property. This is a new contractor, by the way. He goes to the property to take care of the issue. And the tenant said, oh, you know what, we're tired today, and my husband slipped and fell at a barbecue, so let's do this a different time. Contractor goes back the week after that. They said, no, not now. Goes back the week after that. Tenant says, no, not now. The third time, the tenant says, you know what, how about I just tell you when I want to get the work done? Contractor said, okay, that's fine. 3 years go by. True story. 3 years go by, and I get a letter in the mail. And the letter in the mail says, I'm being sued. I said, oh, this is interesting. I've never been sued before. And it says, you're being sued because your bathtub was too slippery when the water was on, and it caused the tenant to slip and fall. I said, what the heck is this all about? So I called my property management company, and I said, what is this all about? Now, this is when I had moved to a new property management company, thankfully, but the same tenant. The new property management company had documentation of every communication with the tenant, and it turns out that they had called us about this chip, but we also had documentation talking about how the tenant slipped and fell at a friend's barbecue. But now that they sued us, we have to go through the process. Now, again, this is scary stuff because you have no idea what a lawsuit is like until you go through it. You have no idea what these things are like until you go through it, but you learn. Now, thankfully, I had insurance who paid for the expensive attorney, And then we were able to get this case essentially to go away. We had to settle because it's cheaper to settle than it is to pay an attorney $300 to $400 an hour, every hour. Welcome to America. But that was part of the process. Now, that's part of the take action part. When most people hear things like this, it gets scary, right? Why would I want to go through that? Why would I want to go out and go through that headache? Well, experience, mistakes, screw-ups, failures will teach you more than anything else will. They're not fun when they happen, but then you can laugh about it later on and joke around about it and then sell a book about it and make some money on it too. I haven't done that, but that's the part of the process where you can learn, you can do, and you have to be willing to keep getting back up, get punched in the face, get back up. That's where then financially wealth is found. And luckily here you have a great team at Mindvalley to keep encouraging you to keep going and keep going. So what are the things that you can learn about? This is just a small list. Learn about stock market investing. Learn about real estate investing. Learn about businesses. By businesses, I mean businesses that you can go out and purchase to run or to be a part of. You don't have to always do it all yourself. You can have partners with it. Learn about investing in startups. This has become so much more accessible because, well, Shark Tank made startup investing very popular in the United States. And so now many platforms have opened up online to make it more accessible and easy for people to invest in other startups. Learn about entrepreneurship. Many of you are entrepreneurs here. There's a lot of amazing resources at Mindvalley to learn about entrepreneurship. Learn about the blockchain. That's been doing a lot of revolutionary things. Learn about artificial intelligence. There's a lot of things with AI in Mindvalley. These are just a few of the things now that are starting to change the way that our economy works and have been around for a long time. But these are different ways that you can put your money to work. That way you can own assets. That way you can capitalize on future opportunities. That's so right now you need to be doing two things. Number one, getting prepared. Get your money right. And number two, get financially educated. That way when the opportunity happens, you can actually see it and capitalize on it. Because now you're putting yourself into action. That way you can capitalize on things. Now the next thing that happens in this stage, which I'm going to give you a little bit of caution of, is when you start to go down that rabbit hole, it becomes very overloading. Very overbearing. I like to call it investing overload. If you've ever started that fitness and health journey, it's very easy now to get very confused about all the different options when it comes to fitness. What kind of diet do I go down? Should I become keto, paleo, vegan, carnivore, or all the other diets out there? What type of exercises should I be doing? How many macros should I be tracking? How much incline should be on my treadmill when I'm walking? How much should I be breathing through my nose and my left nostril and my right nostril? It gets hard. There's a lot of things that are happening at one time. But if you want to be healthy, you can strip a lot of that away and just say, okay, how about I start eating a little bit cleaner and I start exercising more? And then as you start to do that, that's when you can start to progress and find the right opportunity and exercise and diet for you. But you don't have to go from 0 to 100. You can start at 1 and then go to 2. And it's the same thing with money. As soon as you start learning about investing, it becomes very intimidating. If you start learning about stocks, you learn about stocks, companies. Then you learn about index funds. You learn about ETFs. You learn about mutual funds. And then you're going to start learning about expense ratios and options and all these other fancy derivatives and financial instruments, which can become very overwhelming. But again, we can take steps back and say, all right, you know what? We'll get there when we get there. There are ways for you to just put your money into the markets. Same with real estate. And that's why the key for you to really get started and learn from that experience is just get started. That's the most important thing. Because there will be opportunities. Now, opportunities come when times are good and when times are bad. But what you have to remember through all of this is that there's always opportunities. And opportunities are there for the people that are looking for them. And the people that can look at them and capitalize on them are the people that are financially prepared and the people that are financially educated. So now if we work backwards, this is the time to be getting financially prepared. This is the time to be getting financially educated. Why? That way you can see the opportunities. That way when opportunities happen, you can capitalize on opportunities. And when you can capitalize on opportunities, well, then you can also capitalize on the second P in the poop method. That way you understand how all of this works.
Whenever I used to hear people talking about manifesting money through your thoughts, using the law of attraction to become wealthy, my scammer senses used to go off because I knew that if you want to become wealthy, there are things you have to do with your money. It's not just your thoughts, it's what you do with your money. You gotta make money, you gotta use your money smartly, you gotta invest this money, you gotta grow this money if you want to become